All right, looks like this is working. The paper gold price has been smashed almost $200 now since August 6th. We are now down to $1,876 an ounce for paper gold prices. Silver prices have been smashed similar amounts, but the paper gold price is down enormously since August 6th when it was at, let me pull this up here, $2,063.20 on August 6th. So that is almost a $200 drop already in the paper gold price. And of course, for those of you who are new to the gold market, who are new to investing in gold stocks, if the paper price of gold at any price drops $200, there normally is going to be corresponding or worse smashes in gold stocks. But that does not mean that gold stocks are in trouble because margins are record. You're starting to see record earnings from a lot of the gold miners, as you can see there on your screen with Fred Hickey, who is covering the earnings for the gold miners. Newmont Mining hiked its dividend a few days ago by 60%. Agnico Eagle, which just cleared off the capex bill of a new operating mine, which was up in, they were working out the bugs over the last 24 months, and the capex bill has come down. They just hiked their dividend by 75%, and Alamos Gold just hiked their dividend by 33%, and the gold mining industry has a record solid balance sheets and free cash flow and margins. The amount of net debt for gold miners, the industry-wide, it has actually never been better. So industry-wide, this is good shape, and we may start to see with paper gold prices being smashed like this and maybe going lower perhaps over the next couple months, which is really weird that paper gold prices are smashed this much. Why? Because the narrative, and I would say it's a false narrative, about a dollar rally, because the dollar index really, and I looked this up, the dollar index was actually rising while the gold price was rising up to 2,000. So the dollar index was rising in, let's see here, August. The dollar index was up around 93 on August 23rd, around 93.17, and then the dollar index fell a little bit and then it rallied. So the dollar index has been range bound while the gold price was rallying enormously and then having this paper price correction. But what has changed is short-term sentiment and also profit taking, and then also the mainstream financial media talking about a dollar rally. Even though if you look at the dollar index, there hasn't been much of a dollar rally really at all. Actually, since June 26, the dollar index is nowhere near where it was on June 26 when it was at 97.5. So there's been attempted rallies and then smashes back down, because I think the majority of people are well aware of what's going to have to happen to the Federal Reserve's balance sheet in the next 6 to 12 months. And it is not going to be pretty, because the Fed is the buyer of last resort for toxic sausage, for toxic financial assets, for junk bonds and corporate debt and other toxic sausage Wall Street makes, and U.S. Treasuries and municipal debt. The Fed has moved a lot of this stuff off balance sheet. So technically, like, there's, I believe, a municipal facility that the Fed set up off balance sheet. I think the state of Illinois has already drawn from it. Not too much. I think it might be only a few billion so far that we know of that they've officially said. But the Fed has been playing games with their official balance sheet. If you've been involved in markets, or your markets, and I'm using air quotes, for at least a decade since the 2008 financial crisis, or you're a financial professional, you should be aware of how definitions change, goalposts change, and the Fed has been changing rules really since the 2008 and 9 financial crisis and all the craziness that went down. And we only learned about that in hindsight a couple years later, about all the crazy rules changes. And we've had so many rules changes behind the scenes just to get us to this point, and the fake stock market rally that we had that was all central bank induced, and also index fund. Okay, so we have a fake narrative here about this strong dollar rally, and the dollar index, it's just really funny. If you look at a correlation chart between the dollar index and the gold price, the dollar index has not had a big rally yet. Okay, there's people talking about it's going to have a big rally, or that it's having the big rally now, but if you look at the chart over the last 6 months in the dollar index, there's not a lot of bullish stuff there. I mean, it's getting close to another short-term top, so we'll see if it gets past there. There was a short-term top at like 93.96 on September 28th, it looks like. September 29th. Okay, it was in the end of September. I'm having some trouble zooming in on that chart. Anyway, the main reason for this story, besides people writing messages complaining about their gold stocks, and by the way, if the paper gold price and paper silver price continue to get smashed, you're going to have short-term weakness in the gold stocks. However, smart value investors who have a longer-term view of things are going to be smartly accumulating. And this is why you don't buy all of your positions at once. Some people don't want to hear this, but this is why you don't buy all of your positions at once. There was lots of people who were buying shares of Franco-Nevada when it was much higher, Sandstorm Gold when it was 10. I was warning people, why are you chasing the shares higher at 10? Why aren't you waiting for a pullback? Because there's always paper price smashes, because look at what the banksters get away with. JP Morgan paid, what, not even $1 billion fine? And they're right back, and you can see this in the charts at 2 a.m., 3 a.m. in the most illiquid trading hours, either late at night or early in the morning, just smashing the crap out of it. And you can, of the paper price for physical gold, and, not physical, for paper gold and silver prices. And you could even see this on the Kitco charts, because that's how I learned about this when I started reading Ed Steer's newsletter 2007, 2008, 2009, and he was showing it in the charts, all the smashes that were occurring before the markets even opened here on the COMEX in New York. Well, I'm not in New York, but the COMEX in New York. Okay, so the main topics here for today's show are the central banks sell gold for the first time in a decade. Oh, one more story here about gold miners. So the gold miners are doing so well. Their balance sheets are so good that Newmont Mining has just said, with their earnings announcement and their dividend hike, which was, let me check here, 60%, I think. Yep, 60% according to the Fred Hickey quote, who is tracking all of the conference calls for the gold miners. Newmont Mining says their new dividend hike is sustainable even at $1,200 an ounce gold. That is impressive. That is a robust margins, cash flow, and balance sheet. Now, I don't know if we'll see if it's I don't think gold's going back to 1,200 though. Maybe. But I don't think it's likely. Anything is possible in this environment. I don't think it's likely, though. I think gold maybe goes to a little bit lower, a little bit below 1,800, maybe. But we'll see. Maybe it gets a little below 1,800. The dips are being bought, though. It's being accumulated. You've seen an enormous amount of accumulation patterns in the top quality gold stocks since March. Really, since March. The amount of accumulation in the best gold stocks and the best silver stocks, and I'm not talking about really shitty juniors that are issuing press releases about drill hole results that are probably not really good. I'm talking the best companies that can actually mint money right now, that are actually hiking dividends. And some of the dividend yields are like 8, 9, 10%. They're getting pretty high now. So normally with those companies, it's a bad balance sheet, it's a yield trap, but with the gold miners, it's actually the exact opposite, because the gold miners, their balance sheets are getting their margins and their balance sheets and free cash flow have never been better. Okay, so the main topic, now that I've covered the gold miners and addressed that, because I just always get these questions, and I have tons of articles behind the paywall about Newmont Mining, Barrick Gold, royalty and streaming companies, junior silver miners, and I've been warning people, don't chase if one of these juniors, which has a mine and they're raising capital to build it and the stock is up, don't chase the price too high, wait for pullbacks, because pullbacks will probably come. I've been in these markets now for 12 years. But this story is about central banks sell gold for the first time in a decade. Now, the title is misleading because they did sell gold, but it is actually a very tiny amount of gold that was sold. Now, why would they sell gold? I got this question about why would they sell gold, and have you ever been in financial difficulties and had to drain all or almost all of your savings or sell off assets that you did not want to sell for cash to get out of a tight spot? And that is what some of these governments and their central banks are doing right now. That is why they're selling gold, because they need cash. So you're having the Turkish government, they're selling some physical gold because they need dollars. There's a dollar-denominated debt problem among Turkish banks and Turkish companies because they had currency problems over the years. And I think, well, they don't have currency swap lines, but they do have access to the global repo facility, which they can pledge treasuries as collateral. Maybe the Federal Reserve or the U.S. Treasury will allow them pledging gold as collateral. I don't know. In the past, gold was actually the best collateral. But in the dollar standard system, I'm not sure that will be allowed yet, but maybe the rules will get changed. Turkey does need dollars, and so they're selling some of their physical gold for dollars. You're also seeing gold sales from Russia too. So this is the first time, I think, in 13 years. Central banks are tiny net sellers of gold for the first time in 13 years. Central bank gold sales accounted for 12.1 tons of bullion in the third quarter. Selling was driven by Uzbekistan and Turkey, while Russia's central bank also posted its first quarterly sale in 13 years. So why would Russia sell physical gold? So they probably need some dollars, but also because Russia's economy is so heavily dependent on oil and natural gas revenues, which have not, oil prices have been sputtering. Oil did rally. However, Russia's budget, I believe, was based on $50 or $60 a barrel oil. I think $50 a barrel oil. I think initially it was based on maybe $40 or $40 a barrel oil, and then they had to change their budget because they wanted to do some stimulus. And I think it's $50 a barrel is Russia's government, and all their infrastructure programs and social spending is based on about $50 a barrel oil, and oil prices are not at $50 a barrel. So there's a budget shortfall in in economies that have a lot of oil production that are so reliant on oil revenues. So they're selling assets too that they probably don't want to sell because they need cash. So this is like Joe and Jane on Main Street who need to sell, need to go to the pawn shop or need to go sell something on eBay or on Craigslist. They need to get cash quick. And they need to go pay off a debt, or there's an emergency medical bill, or their car just broke down and they have to go to the mechanic, and the mechanic seems to be honest and says, oh, you have a transmission problem, and they maybe got a second opinion and it actually is a transmission problem and the mechanic's not trying to cheat them. And so this is a situation where there's an emergency and they need cash, and that's why these governments are tiny net sellers of physical gold. But it's really it's not even 13 tons of gold. So yes, it seems large, but it's not really that large. It's a tiny amount for now. It's 12.1 tons of bullion in the third quarter. And then also the demand, which the World Gold Council just released a new report on October 29th. The gold demand is down. Q3 gold demand is down 19% lower year over year, down to 892 tons. But one of the main reasons for that is because retail in China and India does not buy. They do not buy a lot of physical gold and silver when the price is going up. So historically, they buy on dips. They wait for the price to get smashed. So if the gold price were to correct below 1,800 down to 1,700 or lower, I don't think it'll go that much lower than that. I don't even think it'll go down to 1,700, but you never know. And then you would probably start to see more Chinese and Indian buyers come back in and buy more physical gold and silver. But while the gold price was going on its absolutely enormous run from March through first week of September, from 1,200 or so up to over 2,063 an ounce, it got as high as. You were starting to see stories come out that Chinese buyers, the retail Chinese buyers and retail Indian buyers were cutting back. They didn't want to chase the price higher because historically that is what Chinese and Indian buyers do. They do not chase the price higher. They wait for dips. They wait for smashes in the paper price, and then they accumulate. GATA, Chris Powell at Gold Antitrust Action Committee came out with, so I have an extensive article from Bloomberg from Eddie Spence about central banks sell gold for the first time in a decade, but I just summarized it here. So really, it's only a couple countries, and it's not an enormous amount, and the gold miners are still doing superbly. So that's some of the main takeaway. It's not an enormous selling of physical gold, but the perma gold, the gold perma bears, are pushing this narrative that all these other central banks are going to sell. But if the global economy is not doing well, and the global economy and countries are not generating lots of trade surpluses, they don't have those dollars to go buy gold with. So if the global economy was doing better, and countries were earning more trade surpluses, and the global economy was functioning better, they would take those dollars that they were earning through trade, and they would recycle that. In the past, they bought a lot of treasuries, but they would also buy gold. So there's just not a lot of positive trade right now to be recycled into buying more physical gold. Plus, you have a lot of these oil revenue dependent countries like Russia that don't have the oil price where they need it at, and that's why they need cash. Okay, so let me read this article from Chris Powell, Gold Antitrust Action Committee, and all the links to the Bloomberg article if you want to read about net central bank sales. And if you look at the chart, and you can see it there on your screen, it's actually a really tiny amount for net central bank sales. Dear friend of Gata and gold, according to the old saying, sometimes attributed to Mark Twain, there are three kinds of lies: ordinary lies, damned lies, and statistics. Of course, not all statistics are lies, but statistics always need to be challenged when the entities issuing them have an interest in spinning them in a certain way, as government almost always has such an interest. So while it is understandable, given the slovenliness of corruption of mainstream financial news organizations and market analysts, it is still disappointing that central bank gold statistics are routinely accepted without question, even as it is the long-standing policy of the primary compiler of these statistics, the International Monetary Fund, to fudge the numbers. That is, according to March 1999 secret report of the IMF's executive staff, the agency's central banks are authorized to conflate gold in their vaults with gold they are lending. The acknowledged purpose of this fudging is to prevent the world from discerning just how much central banks are manipulating the golden currency markets. So we've had this gold price correction, and the Fed's balance sheet is going to start. It did not move up this past week. It did not move up. But over the next 6 to 12 months, it's going to move up a lot. And I've outlined, and I'll write an article on this hopefully in the next couple weeks, maybe next week, but definitely in the next couple weeks for my Patreon account contributors, laying out all the garbage the Fed is going to have to buy. And there is a lot of garbage. Trillions and trillions and trillions of garbage. The Fed is the buyer of last resort for all these financial assets, and I'm using assets very loosely with air quotes here, to bail out hedge funds and investment banks and the large banks on Wall Street. And the Fed has to pay 100 cents on the dollar or more, because the Fed, in some instances, was paying over 100 cents on the dollar buying the corporate bonds of companies like Apple, which supposedly has almost $200 billion in cash. But why does the Fed need to buy $67 billion in Apple bonds? This is also ludicrous. They created currency units and credit out of thin air and went and bought bonds, and they're doing leverage bond trades. The Fed is a hedge fund too. All these central banks are. At least the Swiss National Bank was honest. They ran the euro peg for all of 3 years. They created hundreds of billions of dollars out of thin air. It didn't work. They canceled it. They took all these currency units. They created all these dollars worth of currency units they created out of thin air and started their own stock technology hedge, their own stock hedge fund. For the Swiss National Bank. They just created these. You can go and look it all up. This is ridiculous. No, hardly anyone talks about this. The Swiss National Bank literally created currency units out of thin air, running a euro peg, hundreds of billions of dollars worth, and then went and bought stocks with it after they created the currency units out of thin air. And hardly anyone criticizes them for this. That is according to manipulating the golden currency markets. Lately, there have been many reports asserting that central banks have become net sellers of gold after many years of being net purchasers. For example, and he links a lot of the articles that I just discussed. But as that IMF report suggests, central banks are never more misleading than they are with gold. Indeed, the location and disposition of national gold reserves are secrets that more sensitive than the location and disposition of nuclear weapons. For nuclear weapons can only destroy the world, while governments understand that control of gold is control of the valuation of all capital, labor, goods, and services, control of nearly everything, or the one asset that you can take ownership of that doesn't have counterparty liability. While the recent news stories and market commentaries assert that central banks are now net sellers of gold, and it's a very tiny amount, but all the gold perma bears are all going to say, look, the central banks are selling, therefore you need to just short gold and you're going to make lots of money. While the recent news stories and market commentaries assert that central banks are now net sellers of gold, the authors of those stories and commentaries don't really know that. They only know what central banks report doing. And of course, nobody questions this because they don't make the assumption, rule number one, that governments lie. And they only tell the truth when it benefits them. And they change the rules all the time. Questions this, though throughout the years, central banks have both sold and leased gold and acquired gold secretly. China has gone as long as 5 years acquiring gold without reporting the acquisitions to the IMF. The gold data is especially ripe for questioning now, in light of the assertion a few days ago by London metals trader Andrew Maguire that China has begun bypassing the London bullion market in its acquisition of gold and has begun acquiring unrefined gold directly from mines in Africa and South America. That's interesting. Maguire identified no sources for his assertion, but any financial news organization that wanted to get serious with its reporting about gold and central banking could easily pursue the issue by inquiring with central bankers, gold traders, gold mining companies, and customs agencies. But that doesn't fit the narrative, and that takes too much work. And I've met journalists, and that is way too much work, especially when there's a happy hour and casual sex immediately after work. And customs agencies, of course, few such sources might want to go on the record, but some might comment confidentially. At least news, and especially when government agencies or corporations can just hand you a press release, and you can be a political hack, just like we learned in the Podesta emails. Just like the journalist admitted, I'm a political hack. Well, there's lots of political hacks. Most journalists now are just political hacks masquerading as legit independent journalists. At least news organizations and market analysts could acknowledge that while government statistics may not always be damn lies, they aren't always necessarily the truth either, especially on a subject as sensitive as gold. So that's what the central banks are reporting. They are reporting net sales, but it's only a tiny amount of net sales. But the perma gold bears are having a field day with this. This is like catnip to them. They are going absolutely bonkers. And so far, the dollar index has not gone below key overhead resistance levels yet. There's still quite a few more. And also, has anyone seen any currency swap lines spiking? My friend Lynn Alden normally tracks all this with currency swap lines. Normally, if there was a dollar shortage and things were going to get really bad, we would start to see on the Federal Reserve's data that there's big currency swap line draws. And we haven't seen big currency swap line draws. $5 super chat from Will Drake. Thank you for the $5 super chat. That is $5 more than I'm going to make in Google AdWords revenues from this YouTube video. And people are like, oh, YouTube is running ads in your videos. I'm not getting them. You should see the analytics. Some days I make $3. So I work my ass off for 30, 40 minutes answering questions, doing analysis. Sometimes it takes hours to find the articles and get the information. And YouTube's giving me like $3 a day. But thankfully, I have my patrons. Thank you for the $5 super chat, Will Drake. What do you think of the Canadian government reset leaks? I have not seen the Canadian government reset leaks, so I cannot comment on them. Too conspiratorial, or should we treat it as true, even if it isn't? Love the Patreon, by the way. Oh, you love the Patreon. Thank you so much. Well, I appreciate it. One of over 1,000 Patreon account contributors still. It is only $5 a month. There's a lot of content behind the paywall there. I spent quite a few hours working on that oil article in the last couple days. There's good content behind the paywall. And some of the best gold stocks that I've been writing about for the last 6 months, now they're starting to go on sale. And if you didn't chase the price higher and you had some cash, there's going to be good buying opportunities. I think there's going to be a lot of mergers, in my opinion. There's going to be a lot of mergers and acquisitions now, because the comments from a lot of these gold mining CEOs, the ones that are producing, that are paying off all their debt, that have clean balance sheets, or the debt's coming down enormously, really good free cash flow, really good margins, hiking dividends, they have a lot of extra cash. So you're going to start to see, if the paper gold price and paper silver price go lower, you're going to start to see now the mining executives of the best run companies start to be aggressive about buying the dip, and that means mergers and acquisitions, I think. Now, they're going to be selective. Hopefully they'll be selective. So, Will, unfortunately, I have not seen the Canadian government leaks. I may do a show on the Great Reset. Although if I do a show, I mean, my YouTube's view counter's frozen. It's been frozen despite all the videos I've been doing the last 3 weeks, for almost 3 full weeks. It hasn't moved a single view. It's just laughable at this point, all the censorship. And I think I've added like 100 new subscribers to 200 new subscribers to my channel in the last like 6 months. Very low number. It's just ridiculous. I think the last time I did a George Gammon interview, I got subscribers to my channel, and that was the last time my subscribers moved. Anything significant. So I have not seen the Canadian government Great Reset links. But nothing surprises me. I mean, it's out in the open. You had Time Magazine. Did you see the Time Magazine ran an article on it? You have the World Economic Forum. You have Time Magazine. You have all these people talking openly about a Great Reset. But it goes back to that Rahm Emanuel quote that I've been talking about. Never let a good crisis go to waste. This is how the evil economic and political elites who have no morals, no ethics or morals, this is how they think. So if I do a Great Reset show, I will try to find that Canadian. Thank you for letting me know. I did not know that there was Canadian leaks. I only knew about what George Gammon said with the World Economic Forum and Dr. Evil there, the James Bond villain Klaus, and his other James Bond villain friends, and then also the Time Magazine piece promoting the Great Reset and how we need to reset things. And now they're running YouTube videos for the World Economic Forum, how like we shouldn't eat meat, even though AOC likes expensive hamburgers, and all these champagne socialists are all the biggest freaking hypocrites. They are so hypocritical. You have to hold your nose. There's so much bullshit because it smells that bad. Okay, another super chat for $4.99. Thank you very much to Animalia, Nicole, Chrysalis, Nix. General thoughts on investing in emerging markets. I seldom find news sources covering this topic, physical gold or better potential in emerging markets. So my friend Lynn Alden is a big long-term emerging market bull, mostly because of valuations, but value stocks in general, a lot of value stocks, especially the ones that don't have leveraged balance sheets, because a lot of the old, stodgier that value plays that didn't have growth, we're doing tons of financial engineering, and you want to be careful with companies with too much debt on the balance sheet. But value plays have drastically underperformed. I was seeing a graphic about value stocks from former hedge fund manager Jesse Felder, that value stocks now, the drawdowns are the worst in 200 years. Value stocks have gotten killed that bad. So a lot of value plays in value-oriented funds. The amount of drawdown from value-oriented funds is enormous. There's lots of value fund exchange-traded funds. Emerging markets have some major issues. Lynn Alden, definitely go back on Amalia and listen to that interview I did in the last 5 or 6 months. I think it was March or April. I think it was April with Lynn Alden, and I grilled her really hard on emerging markets. And, she just answered the question superbly. And in general, I think a lot of emerging markets, and I've said this a lot, their business models changed since the 2008-9 financial crisis. And a lot of emerging markets went exports to China. So in terms of exporting lots of commodities, so raw materials like food, energy, metals, industrial metals, and gold, and precious metals, and then also luxury goods to China, and then they borrowed in dollars, so they loaded up on dollar-denominated debt because they saw all the quantitative easing programs that Ben Bernanke was doing when he was Fed chairman. And I believe in 2011, I think the dollar index got down to very record lows. I haven't pulled it. Let me see here. I think it got 72. Let me open the chart here. The dollar, I think by 2011, I think the dollar index got down, and that was when the emerging markets by 2011, when the dollar index was already low, that's when the emerging markets went absolutely drunk on dollar-denominated debt, and it was the worst possible time because the dollar started rallying. But when you borrow dollar-denominated debt, you need dollars to pay it back. So if global trade stops functioning, if commodity prices crash, and some commodity prices started to go into a bear market within a year or two after that. So the business model for a lot of these emerging market countries, and not every emerging market country was like this, but a lot of them was export a lot more to China, borrow since the 2008 financial crisis a lot more in dollar-denominated debt, and then don't do as much business with the U.S. But then you've had lots of net capital outflows from the emerging markets. That's one of the main things. The emerging market countries that have net capital outflows, they start to put in capital controls, and it starts to get messy. Oh, troll in the comments section. Harassment gets blocked immediately. Name calling and harassment gets blocked immediately. Name calling, insults, cussing gets cussing at me gets blocked immediately. I have a zero tolerance policy for that. I've just taken too much abuse the last 12 years. Like really nasty stuff that I don't like talking about publicly. Okay, super chat from Wally. Thank you for the $5 super chat. He says, what do you say about the supposed over 30% recovery in the third quarter? I mean, at this point, from a low base, you can say it was a 30% recovery. You can make the government economic data, they can make it look almost however they want. Look, China, the US, they all stagflate, tax, lie. And the lie component is fake economic data. And they know it fools the algorithms. And the majority of financial professionals, I'll be honest, the majority of financial professionals are very, very lazy. The ones who are actually mainstream, the financial professionals who are mainstream and rich, they're normally just good at memorizing. They got A's in school at the university level at a major prestigious university, and then they went and got a prestigious economics degree or MBA, and they're really good. They know all the government data, economic data. They have no common sense whatsoever. So this recovery, I'm not really seeing it. There's a lot of online orders. People are going to the grocery store. I have not seen a lot of people get their jobs back. I still know tons of people in this area, and this area is supposedly insulated from recessions. So people who aren't government employees who haven't gotten their jobs back. So I'm very skeptical about that data. Let's just put it that way. But all these governments lie about economic data, about inflation, with the consumer price index. It doesn't measure the same basket of goods. It's a moving goalpost, a moving target. GDP is a joke, because if GDP accounted for a real inflation rate, there wouldn't be any positive economic growth. It's all nominal GDP targeting. Now we're going to have yield curve control, probably. Well, at least a version of Japanification, which is basically stagflate tax lie too. Okay, thank you for the other $5 super chat. Anamali, I really appreciate it. She says, thank you, Jason. You're welcome, and thank you for the extra $5 super chat. Yeah, go back and listen to the Lynn Alden interview. And Lynn Alden, if you follow Lynn Alden on Twitter, also she has a free email newsletter, and she has a paid service, and she talks about individual emerging markets. She does extensive work on each individual country. You have to be really careful, though, about buying emerging market ETFs, because the Chinese government has made sure that Chinese state-owned enterprises are enormously put in, they've overweighted them, Chinese state-owned enterprise companies, the large companies, into emerging market ETFs. So some of these emerging market exchange trade funds have 40, 50% or more Chinese state-owned enterprise companies with sketchy accounting. So basically then you're getting a China ETF and you might not know it. So you have to look at individual countries for emerging market ETFs. But in general, a lot of emerging market countries are enormous exporters. So they're either exporting to the European Union, the US, or China. And you have to be careful about the ones with too much dollar-denominated debt, because they gambled and lost, and now they need bailouts too. And the ones with net capital outflows, those governments normally start to panic with net capital outflows because they can break currency pegs, they can break dollar pegs. Historically, emerging market countries, they have a lot of them have dollar pegs, and then net capital outflows happen, and then the dollar pegs start to break. That's what's happened over the last 30 or 40 years. You've had a lot of that. And then the government starts to panic, and the government, in many cases, has done capital controls to try to prevent capital from leaving. Will, I'm not familiar with that. I'd have to look. Another troll. Who says in the comment section, don't forget to dislike the video? What's wrong with you, dude? You need therapy. Well, didn't the Canadian Health Services make a deal with the Chinese military, and aren't they going to be testing that out? I thought that deal was done early in the pandemic. I don't know any of the other details you're talking about, though. Oh, we have one more super chat here I didn't see. Sorry, from Steve Crawford. Thank you for the $5 super chat. Will a rotation into gold, he's also a Patreon account contributor, I believe. Will a rotation into gold and value, into gold stocks, into gold value stocks and commodities burst the tech bubble? Lack of stimulus, seeing rookie traders brag of tech gains all over the place. The technology stock bubble is based on the passive investing bubble. See Mike Green's work? And then you have people, the retail traders that are riding the coattails of that. But Mike Green's thesis, and you could listen to all these different interviews from Grant Williams, and we're way over 30 minutes here, so my memory's starting to go. But go look up Mike Green interviews and his thesis for this, and I think he's right about this, about the momentum driven, and it's market cap weighted. So all these passive investing funds are all just piling into the tech stock, and it's all short-term momentum driven. And then people notice this, traders notice this, retail investors notice this, and this is why the stock market only goes up. But the valuations on some of these tech stocks are just getting ridiculous. I mean, Zoom has a larger market cap now than a lot of normal companies that are making way more money. And Zoom, a lot of people, most of the people I know who use Zoom tell me how much they hate it. I've had problems with Zoom too. No, I didn't block you. I saw there was another troll there. There was another troll there who was calling me names. When will ExxonMobil cut its dividend? I have a article behind the paywall. There's a reason why ExxonMobil is trying everything else to not cut its dividend. Right now, Steve, to answer the rest of your question, I have an article why ExxonMobil will, the last thing, their management team's trying to do everything but cut its dividend. They're trying literally everything else. They fired a bunch of workers. They're going to try to raise more capital. They may even try to put more debt on the balance sheet. There's a really big reason why they don't want to cut their dividend. And I talk about that in the article behind the paywall. Hey, that's a good teaser, right? So I didn't give everything away for free on the live stream show. There's a real big reason why ExxonMobil won't cut its dividend, because it will create a vicious cycle of selling. That's all I'm going to say. And I go into why in the article. Thank you for the other $3 super chat, Steve. Yeah, I think the quality gold stocks are going to be accumulated. Maybe people are going to sell more of the riskier stuff. We're way too long here. This is way too long. I have to cut this off. My memory's really starting to go. I notice it. Okay, well, thank you everyone for listening. I have to shut it down now. I can't really focus and concentrate now. This is way too long, and there's too many questions coming in. I can't concentrate anymore. This is the hand I've been dealt with. I've gotten about 30. I only have like 25, 30 good minutes. Anything more than that, it just starts to get really bad after that. Okay, well, I guess I should be thankful for that, but I'm...